We have, what do we got today? Unemployment claims, continuing claims, so basically nothing. Yesterday we had ADP, but today is the eve of the September jobs report, so we will get that economic data. You did have challenger job cuts year over year. Nobody really pays attention to that report. It did indicate a little bit of a slowing in job cuts from last month, but definitely still up about 50% in job cuts from last year. But that chart can be a little bit volatile. It was a little volatile in the spring as well, so I don't know that that's particularly useful. Otherwise, initial jobless claims this morning are expected to be 221. Last was 218. Lately, these numbers have been coming in better than expected. So I don't know that we're really going to see something on initial claims or continuing claims. Though who knows? Maybe some people on strike are deciding to take unemployment as opposed to striking. It's possible. Some states require you're able to get unemployment while you're striking. So we'll see. We'll take a peek at that. Then you've got S&P Global Services and Composite PMIs. It's just a final read, so we've already had prelim reads for September. And then you'll also get factory orders at 7, including durable good orders. These are all the August final reads. And then we'll also get ISM services. Now, ISM services is interesting because what you'd like to see is less pricing pressure there and some actual growth in services again. You don't want to see this fall into contraction. Its expectation right now is it's going to come in at 51.7. Under 50 is contraction. And frankly, we've been teetering around like 52, actually 51.5 last time, so pretty close, which isn't ideal, especially since if services fall into contraction, then both services and manufacturing are in contraction, which is obviously recessionary. Anyway, so jobs report tomorrow. After the JOLTS report we saw and the ADP report, I don't think you're actually going to get any kind of bad jobs report tomorrow. It seems much more likely that if you're looking for a bad jobs report, you probably have to wait until November. But I don't know that you want to wait that long because you have to wait through earnings. So we'll see. Okay, so let's see here. This data is out in about 90 seconds, so we'll cover that. This morning we've got oil up again a little bit, 1.8% on Brent. That brings us up from a low of 69 on September 9th to now about $75. So what is that? 75, 10-ish? 9%. 9% higher on oil from the low. It's not really that wild. Gold's pretty stable right now at 26.67. And Bitcoin's just giving us the sort of bear warning omen again. It does this sort of thing. My two lines that have really been in play here are the 61.741, and then this 60.719 line. And not so perfect over here, a little more messy over here, but oftentimes we see riding on the lower, getting rejected by the top. Pretty common, we've seen that. That's why the lines are there in the first place. Okay, so now we've got data coming out in about 18 seconds, and we'll see what happens here. So, let's see what happens. All right. Ooh, Alibaba's down 3%. A little bit of a reversal there on the Chinese names. Okay, here we go. Come on. And 225, a little higher than expected with a revision up of +1 last time, and then 1826, so a little lower on continuing claims this time. I don't think that's going to make a move at all in anything.
A number around 221,000. It's a bit higher. Initial claims 225,000. Slightly revised last week from 218 to 219,000. And believe it or not, as well behaved as 225,000 is, it is the second highest of the month. It compares to the first week when we had 230.
Of the year, eh? Oh, no, of the month. He's right. It's of the month because you get 4 in a month.
Above 1.8 million in continuing claims. pretty darn close to expectations, 1,826,000, subtle revision in the rearview mirror to last week. And we see that yields are largely unaffected by these numbers. Listen, whether you're looking at JOLTS, which improved, and even the chairman was quite well spoken at his last Q&A, pointing out that overall, the economy's pretty solid, and the labor market may be slowing, but it's certainly not slow, and they're going to do their best to hold the economy in a solid place. I understand all that. We could question the easing. It's not about what we want the Fed to do. It's about what the Fed will do. We still have a litany of economic releases to go today, and of course, we're going to start to see some better metrics on the service side. But in front of tomorrow's big jobs report and in the rearview mirror ADP, it certainly looks like the game is going to be about yields to the upside. We've gone from a 2-year low yield close in twos to now a 4-week high should we close where we're currently trading right around 365. And if you look at 10s, they're hovering around 380. That's up a couple on the session. If they were to close here, it would be exactly a 1-month high yield close. And that's after coming off of a 15-month low yield close. So things have turned. The dollar index has been a tough one, Joe. A lot of my trading buddies have had a lot of stops triggered. My technicals really looked last week for that close under 100.5 to have some follow through. Be very careful here. It's better to have small losses on the dollar index without any clear violation of 100. All other abilities to be short are just kind of getting in a bit too early. Back to you.
Okay. All right. Good rundown.
Yeah, the reason people go short the dollar is because you expect as yields fall that you would see the dollar fall because the dollar becomes less desirable for buying bonds. And so, yes, being short the dollar is kind of like being long bonds in anticipation of yields falling. Of course, like we said, after the surprise 50 from the Fed, yields actually rose, which is very odd, but that may be a sign because, you know, at least in present snapshots, it's a sign that, oh, well, that's obviously because the economy is doing better than expected. Of course, other people look at that and go, if you believe the data. But then you don't want to become so jaded that you just don't believe anything, because then at that point it's like, okay, well, why are you looking at the data at all? So kind of a interesting little balance to strike out there. Let's see if the Doomers are yapping about this at all. Let's visit them over here.
19 into tomorrow payrolls. The estimate in our survey 150, the previous month 142. Mike McKay, thank you, sir. With us now is Lindsay Piegza of Stifel. Lindsay, let's talk about the numbers that just came out. Anything to fear? Anything to worry about looking at the labour market data through this week?
No.
Really not yet. The jobless claims seem to be pretty steady. We have seen a little bit of weekly volatility, but nothing to indicate a sizable directional trend. Right now, we continue to see that the labor market remains tight-ish, with some indications of cooling momentum. But again, that cooling suggests the data is simply moving more towards a neutral state as opposed to an indication of mounting weakness as we look further to the end of the year and turn that page into 2025.
Where do you get any degree of confidence that we'd stabilize in this state at this level?
Well, I don't think we're going to get much confidence from jobless claims per se, at least not the weekly data that we've stabilized. Big confidence is going to come from more improvement or more stabilization in the non-farm payrolls report. So Friday is going to be a very key driver, not only for confidence for investors, but for the Fed officials looking to make that determination of what's the appropriate next move for November and December. If we see more indications of cooling momentum, I think that's going to bolster the case for a larger, more aggressive second round 50 basis point cut. But if we see more steady conditions, if we see more stabilization, that's going to make it pretty difficult, coupled with earlier uneven inflation data from the PCE, to justify anything beyond a 25 basis point cut. And should we see the numbers come into the upside, I think the Fed may be willing to sit on the sideline and take a pause in November.
Forgive me, because I've been conditioned by experience, Lindsay, but every time we're heading into a non-farm payrolls, everyone says this is going to be decisive. It's going to tell us where we are in terms of on the brink of some sort of deterioration or some, steady as she goes type of state. And then it comes out and people find 15 different narratives to justify within that same data. Lindsay, why should this be any different?
Well, I think, again, it's not the end all. It's not the deciding factor for November, but it is one of the key pieces. We have a handful of key data points between now and November, and the Fed is going to look at them in their entirety. So coupled with the idea that the PCE, yes, it's a key driver, but it was mixed. It was uneven. The headline retreated. The core showed further upward momentum. Now, we're going to turn our focus to the labor market. If the labor market comes in very clear to the upside or the downside, that's going to be a very key driving factor to that decision. But again, if it comes in mixed, the Fed is likely to say, well, we need more indications. We're going to wait for a next round of inflation. We're going to wait for the next round of the employment data. So it's not that one data point is going to make the decision, but each of these data points becomes increasingly more important as the picture is not yet clear as to what the Fed should be doing.
We've been saying every data point's more important for like 4 years, I feel like. Okay, maybe not quite 4. Well, yeah, end of 2020. Yeah. It's like every data report is the most important data report. My gosh, it's so exhausting. Look, the reality is, at this point, nobody really knows if you're gonna have a massive wave of layoffs in October, November, December, and guarantee yourself a recession. Or even January, or not. It's kind of a crapshoot. Now, there are plenty of indicators that suggest we're going to have a recession, but there are also plenty of them that say we're not. So, and some of the latest recession indicators, I actually want to go through and sort of update that chart. Some of the latest recession indicators have gotten flipped already. So, I think that's going to be worth taking a little peek at. Yeah, give me a second here and I'll pull it up.
150,000 is very reasonable, keeping us on par with, again, the pace of job creation, raising the 3-month average closer to around 130,000. But the unemployment rate still steady around 4.2%, well below what the Fed has designated as that full employment range or the sustainable level of joblessness. So I think we get a somewhat favorable report still indicating tight-ish conditions and still indicating the need for a very patient, tempered, controlled reduction of rates as, again, inflation, their job of reinstating price stability has not yet been met.
Lindsay Piegza of Stifel. Lindsay, thank you. Essentially the message we got from the chairman earlier this week. We're in no rush. We're not in a hurry.
Which was the reason why people thought, well, maybe we got a little bit ahead of ourselves. Then, of course, you have Andrew Hollenhorst right on cue, comes out with this. Jobs data to give direction, basically saying low initial jobless show layoffs have not picked up, but that may change. He continues to predict 70,000 for tomorrow, which
downside
definitely
risk.
Yeah, exactly. Which, is a different scene.
Mr. 70K over a city. Unreal. With us around the table, Jack Manny of JP Morgan.
70K prediction. That's actually funny. That's pretty low. That's pretty dang low. Okay, so a couple of things. First, let's go over here and let's go through this recession list together. Okay, so we're gonna have this updated as of 10/3/2024. 0539 PT. Okay, so what do we sit at now with the inverted yield curve? Let's see. 210. I know we ran up to like 19 there for a minute, but I think we're back down. 14, 15 or something? What are we at now? 14. All right. Pretty much the same as where we were before. Okay, so then we have this volatates. This is so volatile, I'm going to remove that. This peak in government, education, healthcare, employment, we have seen. That is true. Growth rates. Plateau below 5% of the personal savings rate. So this is true, but it was revised up substantially from the 2.7. So let's look at that. Personal savings rate. Freaking revisions. I guess it's like, oh yeah, the data's telling you one thing, and then they just revise it. This personal savings rate was all the way down at 2.7 for a moment. and it really tanked. Usually, you know, we've been under 5 before. You know, being slightly under 5, I don't think is the end of the world. You know, you really probably got to be over in this 2 range. So this probably got revised away. So let's get an X emoji. Red X emoji. Let's kill that one. It's crazy. So this revised away. Yes, now at 4.8%, but still decently near long-term averages. You know, 2.7% before the revision was much more concerning. Delinquency rates, credit cards, consumer loans, those are still doing poorly. Architectural buildings still doing poorly. We're going to get ISM services today. So ISM services are above 50 but low compared to historic boom periods. That's true. ISM manufacturing is still doing poorly. And, you know, we just had some ISM numbers that indicated, you know, job declines. Now, what's interesting is construction spending. Okay, yeah, let's look at that. Because we just got that. It was for total construction spending. There's an interesting warning here. Percent change. Okay, and let's go with a quarter. Yeah. Okay. Pull out. Yeah, it's interesting. So the latest data was also, you had sort of a tick up. Here, watch this. If you go monthly, you can see you had this big drop in construction spending here. Oh, why does this only go to April? Oh, that's a dumb chart. Oh, there we go. Okay, yeah, this is what I thought. Okay. So there's the August data. Okay, good. So the construction data ticked back up over here. So you had this sort of low in construction spending in June, and now you're kind of back to that 0 level. So it's not a very useful signal to us. So I'm gonna say not useful and ticked back up. I'm gonna X that one as well. Not useful, not highly useful unless it stays low, and recently picked roughly back up to 0. Now another one to look at, which is a new one I want to add to the list, is completions versus starts for real estate. Let's see where I saved that. There it is. So this is an interesting one. Okay, give me a sec to throw this up on screen, because this is definitely not a good indicator, but again, some of these things could have different explanations. One sec. All right, it's this right here. So it's housing starts minus completions. Basically, how many builders are breaking ground on new projects? So housing starts, new projects breaking ground versus completions, finished jobs. Okay. And if you subtract the two, you could see it sitting here at a pretty recessionary level. That is, we have not seen this level since 2001. Since, 2001 is, 2001, I'm sorry, I wanted to talk about 2001, is the dot-com bubble. You didn't have an impact at housing here, the suggestion is, so not 2001. But this goes all the way back here to 74 recession, 80 recession, and then of course you had this double dip over here in, what is that, 06, that's about 06 and 08. So this is as low as 1974 recession, or nearly as low, I should say, nearly as low as 1974 recession, 1980 recession, 2006 pre-recession, and it's actually lower than that, and lower than 2006 pre-recession and 2008 recession. So it definitely is a signal of some pessimism. So I'm going to mention that. Signals, pessimism. I'm trying to think why somebody wouldn't build, but you know, you do have election year dynamics as well. But you also have election year dynamics that could skew this. Which you did have in 08 as well. So, I don't know. Alright, waning pricing power at companies. That's definitely still true. There's no doubt about that. But that doesn't, I mean, that could be part of a normalization. Construction job openings. Yeah, that one moved up again as well last month. This rebounded in last read. So that's dead. Temporary hiring, longest stretch of negative readings, usually only goes positive after recession. This is still true. Jerome Powell's sudden warning, we seek no further cooling of the labor market. You could also add his 3 other warnings, plus 3 warnings from, was it Monday that he talked? Hold on, let's find it. Oh, hold on, was it here? Yeah, it was, labor market is a better predictor of downturns. Did the 50 increase your confidence? And then the revisions were only through March, right? That's actually, those 3 things are bearish. Oh my gosh. So let's go back up here. And additional warning from Powell. Labor market better predicts recessions than GDP. Then you had, I can't remember these things. Labor market better predicts recessions than GDP. It's too early for me to remember this crap. And then, what was the other stuff? This is why I write stuff down. Labor market, the revisions, and then the soft landing gulp. Oh, okay, revision, soft landing gulp. Additional warning from Powell. Labor QCEW revisions were only through March. So current data likely weaker. Okay. Additional implied warning from Powell. Did 50 BP increase your increase the odds of a soft landing? Big pause. I mean it's an implied one, but Fed Beige Book sees 9 out of 12 districts flat or declining. That's true. The Challenger report was a complete disaster. What was it was yesterday's ISM manufacturing report that was pretty bad, I think. Manufacturing report. Or was it yesterday or the day before? Play WoW hardcore with us? Dude, I'd love to. That sounds really fun. So, yeah, okay. The employment index. That was the problem of the September ISM report. It was a disaster. ISM employment index registered 43.9 in September, lower than August, amongst the 5 lowest recorded since the index registered 43.7 in July 2020. Others were in 24 and 23. You had pretty low reads over here, so sort of little 1 month anomalies. But now you're 3 in a row, right? July, August, September, 5 lowest readings since the pandemic. Index contracted for the 4th month, broke a 7-month, after expansion in May, broke the 7-month contraction. Of the 6 big manufacturing sectors, food, beverages, and tobacco and machinery expanded. but companies otherwise are continuing to reduce headcounts through layoffs, attrition, or hiring freezes. Employment index over 50.3 is generally consistent with expanding. But this is just manufacturing. But we should put it in, because it's not good. Okay, so ISM manufacturing payrolls. Third month in a row of contraction. And each of these three, the lowest since July 2020. This would be August. July, August, September. With companies focused on less hiring, attrition, and layoffs in manufacturing. It's worth noting this is in manufacturing. Okay, so that was not a good one. This is another big one right here. So a lot of the reason potentially, and this is a really difficult one to understand, a lot of the reason potentially unemployment claims could actually be going down is it sort of adds to a lot of fugazi around the crap that's going on. And this just makes it very complicated and annoying. But this is like, if you want a scary chart, I'm sorry, I'm giving you a warning. This is not a good one, okay? One of the reasons people on continuing unemployment or unemployment claims, well, initial, I guess, it was more continuing claims. One of the reasons continuing claims might actually be sort of trending down slightly is because if people are unemployed for more than half of a year, they get switched to being off unemployment. So they lose their unemployment benefits and they get listed as 27 weeks unemployed and no longer eligible for unemployment. And this number generally only goes up during a recession or even after a recession, which is also kind of like the weird part. See, like over here, the number went up in the middle of a recession. Over here, it went up towards the end of a recession. Over here, towards the end of a recession. Over here, in the middle of a recession. Over here, towards the end. Over here, towards the end. And then, of course, coming out of recession, you see it as well. But that's still part of the prior rise. Here, it was with the interest rate rise of the 80s. You kind of had it pretty rapidly. This was more sort of midpoint in recession. None of these increases were leading. But you did have it come early in 08. In 08, it was the early third. So usually you only see this increase in the early third of a recession. Now we could argue that, you know, who knows, maybe that's just an anomaly. It's not that big of an increase yet. So, you know, maybe it's just sort of a normalization after the big, you know, spike here after COVID. But anyway, so we'll write this down. So it never increases consistently absent a recession. It's increasing, but usually it only increases once you're at least 1/3 of the way into a recession. It could also fall and be a false signal. This may also be why unemployment continuing claims are falling slightly. Then you have the restaurant performance index. I wonder if there's a new update on that one. Restaurant performance. When are they going to give us a new one? Restaurant sales were relatively flat in recent months. Restaurant insides. So in their August report, they had a pretty recessionary read over here of how in contraction we are on jobs. Now you bob around over here, but as is normal with data, you pop up and down. But the trend is pretty freaking clear. Updated 9/30. Okay. So let's see what they say here. Increase in August, but still below 100 in contraction territory for the 9th consecutive month. Stood at 98.6, up from July. Okay, so we did just get an update. Increase was driven by improvements in same-store sales and consumer traffic from July's dampened levels, though operators continue to report net negative readings for both metrics. Looking forward, restaurant operators remain uncertain about business conditions in coming months. Right. So still negative, but up from last month. Still negative, but up from last month. Now, was it 98.7 or something? 98.2. This should really be under 100 because it's contraction, not 98. 98.7. Or why did I do? Maybe there's a reason I did 98. Hold on, let me see. Is it because 98? Let me see here. Oops. No, I mean that's pretty recessionary. Well, it does tick under 100 sometimes without being in a recession, but it really never ticks under 99 without being in a recession. So that should really be 99. Okay. And it's 98.2 now. Okay, fine. And then the housing starts. So these are issues that you have. You know, obviously, you know, then you have sort of like fuel to the fire. Fuel to fire is Iran, Israel, and then fuel to fire is the port strike. But otherwise, you know, I mean, does anybody else have any other like big bear things here? I mean, this doesn't seem. I mean, it's definitely a big deal. But you know, some of these keep getting revised away. Like another one, GDI under GDP, and this was revised away. Just the amount of revised away is just scary. Lols. Anyway. Alright. Let's see what we got here. Ooh, somebody donated $50. Thank you. Regarding yeah, this is a tough one, man. Alright. So the question is regarding your YouTube video regarding falling 10-year treasury with bond volatility at a rare signal, how do you play it? Yeah, so usually the volatility, I'll show you y'all the chart. Hold on a sec. Usually the volatility doesn't get this low unless you've had quite a long period of rising yields. And, you know, it's just one indicator, so it could be totally wrong. But it just perfectly seems to align with what we saw with Bill Ackman and the second wave of inflation fears. And let me go back to here. Okay. Okay. There we go. You know what I'll do is I'll put that on the iPad, so just give me a sec and we'll look at that here. Somebody says it's hard to find a job right now. Thanks. Oh, the queues fell more after that data. Look, they're kind of bleeding out a little bit. Let me get that chart. Anyway, hope everybody's having a happy day so far. Have I mentioned there's an expiring coupon code tomorrow? Price will go up. You guaranteed lock in the lowest price ever. All right, let me get this up here for us. Get all my signals or commentary, fundamental analysis. You see it first. Okay. So I'll just show how the low that we hit, which is lower than some of the prior, just so you can see it, and we'll explain it. By the way, thank you. Yesterday, I talked about Stock Hack a little bit. Thank you to those of you who signed up for an intro call. We're looking forward to chatting with you. We've gone ahead and opened up some more time slots because it seems like people are starting to have to book out intro calls like a few weeks out. And I think that's because all the slots are full. So I think we just went ahead. I don't know if we already did or if we're going to do it this morning. But we're going to open up some more time slots so we can get some more intro calls done. They're totally free, and it's just sort of like, hey, is this service right for you? And what we're consistently finding at stockhack.com is people are surprised that we can also help with their business, with, you know, what's going on with, you know, some tax strategies, what's going on with their real estate, acquisitions, dispositions, you know, exchanges. This is, I think Financial Advisor really underplays what the service is. It's really like just an all-around wealth coach. It's so much more than stocks. And I would say the vast majority of people who are coming to us so far are like, this is crazy. I haven't been able to find somebody who can actually consult me outside of equities. Now, I'm not saying that's not out there, but it's just some of the stuff that we've been hearing. Like somebody's like, you know, I've been using a Vanguard financial advisor, and every time I talk to them, they just say, just put everything in the S&P, man. Everything in the S&P 500. And it's like, okay, cool. Like, hey, can you help me with real estate? No. Can you help me with, you know, like suggestions on insurance or entities? No. S&P 500, bro. It's like, okay, well, that's cool. I could be all S&P 500, but what about the other things? S&P 500. Now, I'm not trying to bag on Vanguard. This could be totally false. It's just something that I've heard from somebody. So I thought that was really interesting. So anyway, if that's of interest to you, you can sign up for a free intro call at stockhack.com. So here's a chart somebody donated $50 to see. And so this is just on TLT, right? So it's not on the 10-year. This is on a treasury. And so I think what's important here is to pay attention to, let's see here. How about we do, okay, let's draw some circles. You can see where we sit right now over here. I don't know, that is kind of a dark color there. Let me try to make this a little bit. Oh, the opacity is too bad. There we go. Oh, that's much better. No, I don't want to fill it. You know what? Let's go with blue. Nah, yellow's pretty good. All right, so you can see where we sit right now on volatility, right, in this sort of bubble right here. And the last times we had these bubbles were right here during the second wave of inflation fears, and right here, which this is really one bubble right here, because this is not a very fast indicator. It's not like Tesla. This was your Bill Ackman disaster. And then in case you're wondering, this was the banking crisis. I did not talk about this in my video yesterday because what's the banking crisis? Like, Black Swan, bro. Bank crisis. Okay. This right here would have been Bill Ackman. And then this right here, I will call it, let's just, how do I want to do this? I'll put a rectangle around this. This section right here, this was really second wave. So all this chart really tells you is that the volatility on the 20-year, mind you, TLT is the 20-year, on TLT is extremely low, which usually it doesn't stay this low. So the point is, it's actually a cheap time, according to this chart. I suppose it could be wrong, but it's a cheap time, according to this chart, to buy options. Now, unfortunately, the chart doesn't tell you whether those are puts or calls. It just tells you, boy, this is a cheap time to buy options because the volatility you're paying is extremely low. If you already own options, unfortunately, the value has gone down because, in part, volatility has declined so much. You know, because Black-Scholes model, part of options pricing, is implied volatility. Okay, great. So, with that, what do you do with this? Well, again, all this is really telling you is, unfortunately, you're going to go up or go down. Now, a lot of people are like, well, Kevin, no shit. Like, everything is either going to go up or down. Okay. So that's where we look at history. What happened historically? Okay. So what happened historically? Well, yields or bonds went up, right? Yields down. That's kind of worth paying attention to. And you could look at the charts yourself to see. It's not very immediate. It could take as much as 6 weeks. Bonds went up, yields went down. So at least in these two cases, you had some guide of what happened when volatility went this low. So the assumption is that on the right side, now bonds will go up and yields will go down. Okay, great. That could happen. And it would make reasonable sense because A, the Fed should be loosening more, and B, there are a lot of recessionary indicators that are kind of poopy doopy. So it would make reasonable sense for bond yields to fall, especially as we get away from some of these inflationary fears like a port strike or, whatever, some second wave nonsense. So, of course, if you believe in the second wave, then you're buying gold. You're not touching bonds. You might go short bonds at that low volatility, right? So it really depends on what your thesis is. If you think the Fed's going to have to cut faster because A, inflation is not a problem, and B, the jobs market is weakening, and they really want to put a solid floor under the jobs market, then that chart is telling you that right now is a dirt cheap time from a volatility point of view to buy options, call options on like a TLT. That does not mean it is a good idea for you, right? This is why, as part of financial advice, people say personal. Well, at least I say personal, because you're supposed to. People on the internet, they're always like, this is not financial advice. You can give financial advice all you freaking want on the internet. Like, I could tell you, you should buy a house, right? This is like I think you should buy a house. I think everybody should buy a house, but I don't know your situation, right? That's considered broad blanket financial advice, and it's not worth anything to anyone. It's like worthless advice. So that's why, generally it doesn't, while it's a good idea, it might not be right for you. What people should be really worried about on the internet is giving paid personal advice, where it's like, you specifically, in your scenario, you should buy a house. Well, for that, you have to be licensed to do that. Broadly, you can make a YouTube video and go, hey, this has worked out great for a lot of people, and therefore I think everybody should own a home. But again, you can't give blanket personal advice. This is where sometimes you get advisors as well. Like every single client, they get the same thing. It's like, just buy XYZ, whatever. Just buy this ETF, buy this ETF, buy this ETF. Buy this. Well, now it's turning into blanket financial advice, dressed up as personalized advice. That's no bueno. No bueno either. Anyway, sorry. All that might be kind of boring. I don't really even know why I got into talking about that. But I hope that's somewhat interesting. So, anyway. Okay, good. I have a couple of buddies who are electrician construction. I've never heard somebody call it that before, but I know what you mean. I appreciate it. And I've been laid off for about a month now. Yeah, that's not good. Electricians... So I was actually doing some electrical yesterday. I have this weird thing where, like, I'll do electrical work just to get away from reading or studying, or like I'll shovel dirt. I'm eventually going to build a greenhouse. I'm actually running the 6-gauge wire for it right now, and it's like I enjoy it. So but yeah. Usually electricians are always in demand. So that's crazy. Let's see here. Druckenmiller has a huge short bond position. Yeah, I mean, that implies that he thinks yields are going to go up. If you think yields are going to go up, yeah, this is a great point to buy puts. Becky, what rabbit hole? Unfortunately, most financial advisors send you down the rabbit hole. I want to hear about it. No, it's very interesting, and it's exactly what Vanguard does with their advisory services. Thank you for sharing that. Yeah, no, I mean, like, hey, you know, I'm not trying to bag on anyone. I'm just saying there's a different service for everyone, right? And that's kind of what's cool about America. Any insights from Constellation Brands? Oh, garden hack. Thanks, Scott. Let's see, Constellation Brands. They, you know, before I look at them, I really have to look at what, I know they're like a bunch of food brands, right? But I can't remember. Constellation Brands. Oh no, they're alcohol. Modelo, wines, tequila, Corona. Ah, that all sounds good. What else do they make? Oh, they got some seltzers, Svetka vodka, a bunch of wines. All right. Let's see what they got. STZ. A weird ticker. Okay. Dragon longswords are always in demand. Let's go. Dude, yeah, somebody says, what the F, Kevin is getting into growing stuff. Every time I call like a greenhouse supply company or like an irrigation company or whatever, like for pumps and stuff, they're like, okay, yeah, so you're growing weed, right? And I'm like, no, I'm gonna grow like tomatoes and peppers. we don't take marijuana or eat it or smoke it or whatever. And they're like, oh, okay, tomatoes. I think they just see a California number and they're like, California greenhouse, yeah, we got you. That's kind of funny. So anyway, I mean, comp sales here for the fiscal year matched expectations. Operating cash flow smidgen lower. Constellation Brands still sees net sales up 4 to 6%. This is pretty good. I don't know that alcohol is going to be a broad sort of leading indicator. I'm surprised they didn't have to lower their forecast now that I stopped drinking. Maybe that'll show up in the next earnings report. Virgil, email us at staff@meetkevin.com. We'll take care of you. We'll figure something out for you. All right, what else here? Chuck Norris mines Bitcoin with pen and paper. How are yields going up if employment is weakening and the Fed will cut further? Well, that's my point. You know, that's why I think it's crazy to think that. I have a company that sells high quality garden soil, perfect for Kevin greenhouses. Would love to send you some. Hell yeah. What's our I'm probably honestly a little too early on it. I'm probably like 3 months away. It's one of those projects where like I'm not like trying to rush it because then it's not going to be fun. Like I like going out there and you know, I don't know, doing 30 minutes to an hour of conduiting, you know. And then the next day it's like, damn, that's some sexy conduit. You know. But no, I don't want to rush it, so but stay tuned. Do you speak Spanish? I do not. Why don't you have a huge bear position if you think a recession is soon? Well, because if you short the market, you have a high chance of getting smoked out in a melt up, and usually a crash is preceded by a melt up. So, do you have house hack merch? Not yet. Kevin is relapsing. No. Somebody here says my commute traffic is lighter between San Jose and the Central Valley, therefore it's a leading indicator. Bad, Kevin. No. Is BTC a leading indicator for stocks risk off in my opinion? Well, I think Bitcoin is a leading indicator of liquidity, global liquidity. So the fact that Bitcoin has been incapable of really getting to new highs and it keeps having lower highs, to me is actually a substantial red flag of declining liquidity. Israeli military says fighter jets struck intelligence headquarters belonging to Hezbollah. Oops. Play attack. Contacted a financial advisor. What is this? Love you, Kevin, but I contacted a financial advisor who left me in a REIT that bellied up, and a CPA who had been in the job for years could not tell me the basic info, so I do my own research. I mean, I honestly, I don't blame that. I totally agree with that. In fact, I encourage that for a lot of folks. Like, you know, a lot of the situations that we're running into, it's like, okay, like let's figure out, you know, what's the best thing you could do next, and let's work on that together. And then we hold you accountable, and then we kind of step by step. You know, maybe for you, you're good. You know, maybe you're like, oh, you know, but I'd like to buy my first rental, or I'd like to buy my first house, or, you know, whatever. But yeah, that does suck. So okay. Solar Gem makes great fiberglass greenhouses. Oh, interesting. What games do you play with the kids? Well, lately we've been playing Nerf guns. The other day we played water guns. We were soaked. And, you know, then they're like little imaginative games we play. We haven't been into, like, Legos lately as much. Like, that comes up sometimes. California is a socialist shithole, but Kevin likes the weather. California's not that bad. Oh yeah, we do have economic data coming out. We have a lot coming out at 6:45 and 10. I still think it's possible we have a lost decade like Japan. You suggest investing in real estate now? Look, I don't know about your situation, but I always love real estate. It's just so it's so easy, in my opinion, to make money with it. Like, I guess it's just my opinion, but like I look at House Hack and I'm like, my gosh, we see, you know, $50,000 to $75,000 wedge deals every day. You know, we're picking up the 100K wedge deals, and we're like, you know, if somebody bought that with a 50K net worth, they would literally double their net worth. So like, part of us is trying to figure out how can we like use Stock Hack and the advisory service to help people buy wedge deals. You know, where it's kind of like, hey, send us every day, look in your market, see what fixers you see, send them to us, and we will walk you through it. Like, we will hold your hand. And we really think we can dramatically change people's net worths. You know, obviously we can't guarantee anything, but you know, that's our take. Just because we're doing it with House Hack. Everything is red besides Nvidia. Do you speak German? Ja, ich spreche Deutsch. Aber ich muss mehr Deutsch sprechen mit meinen Kinder. Electrician for Enphase here? Oh, that's cool. Let's go. That's cool. Do they let you guys do the panel changeouts? Because I feel like you always have to get, like, every place you put solar on, you have to put a new panel in. You probably have to outsource that to another electrician, and then you can come hook up your batteries and inverters. What do you think about the SEC appealing Ripple? Nothing. How can Bitcoin not be making new highs with all the ETF buying? Well, yeah, well, that's actually one of the problems, right? Why is it not? Should do more interviews like the old days. Maybe. Look at Bitcoin. Yeah, it's bobbing around 60 right now. I don't really know what's going on over there. Tesla bear season. And he says my audio is cracking. Is it still cracking? Hope not. All right. What else? What's changed over the years with nothing? Well, see, that's the struggle that I found is like I have been anti financial advisors for a very long time, and I still am for those that don't also do real estate. It's like I'm still of that mindset. See, it like, and it's not their fault; it's the industry, right? But I mean, think about it. The company financial advisors work for encourages the sale of the products that they have. They can't make a dime off of selling you real estate. And I think real estate is one of the biggest net worth boosts most people could get until they have, a multi-million-dollar net worth. And but there's no money in that for a financial advisor. There's money in that for a real estate agent. And a real estate agent doesn't want you to buy stocks because then you're not buying real estate. And so I'm both. That's really rare. So that's been my frustration. And I think anytime I've mentioned that in the past, I've talked about it. So, but yeah, that's a good question. So, okay, let's see what we got with data coming up. Was ist deine Meinung noch besser? Okay, I never learned to read German. Deutschland gegen California. Was ist in deiner Meinung besser von den Steuern her? Oh, from a personal income tax basis? Probably California. Like, y'all pay a lot of money in taxes. I don't know exactly what all the tax rates are in Germany, but you have a lot of freedoms in California to take really big write-offs that I don't think you would have the benefit of in Germany. Like, I don't think you could write off a plane 100% in 1 year. You can't do that anymore anyway, but that was pretty remarkable. So, yeah, taking a 100% write-off, that's kooky. So, big write-offs limited by 10K hump? No. Oh, you mean, to get over, like the standard deduction. Yeah. Sprechen deine Kinder auch Deutsch? Not really. Jack's he can understand it because I've just talked to him so much in German. But, I keep trying with them every day. So I keep, exposing them, but it's not like the biggest priority, but it's definitely something that's there. We focus on. All right, so look at the Qs. I have a line here for this. 479.62. Yeah, German tax brackets function different. Yeah. When buying as a StockHack client, will you be our agent or is there a conflict? No, I mean, there's no conflict. We don't really have intentions of being your agent, mostly because, we're only licensed in California for real estate. But we don't think it's necessary for us to be your agent as well. Maybe that's something like long time in the future when we're working in every state and maybe we have people in every state or whatever. But no, that's not the intention. So it's just sort of, built into the non-biased, kind of monthly price. Our take. Okay, so let's go see what's going on here. Bitcoin bouncing again a little bit after a little bit of an oopsie-doopsie there for a moment. Then Enphase still trending down. Nvidia's still doing well today, 121. Tesla's under the, you're now at 245. So it's really starting to trend down here going into the Robotaxi event. The Qs are on the line. Amazon down. Okay. Nike. What else do we have here? Home Depot. I mean, a lot of red today. It's like a sea of web. We also have the Chinese stocks down a bit. FedEx, Ethereum. All right. Well, we'll see where it all goes. Yeah, Bitcoin keeps trying to climb. Look at that. All right, let's see what the Doomers have. Why do I not live in Florida or Texas? Well, I used to live in Florida. I lived there for 16 years. I know Florida really well. Let's just say the weather does not compare.
Consultant Accenture in efforts to boost corporate AI adoption. Accenture has trained 30,000 experts on the use of NVIDIA's technology to help their customers use AI. Next up, Starbucks trying to make coffee more resilient to climate change. The company is buying 2 research farms in Costa Rica and Guatemala that will test everything from drones to microbes in efforts to combat drought and diseases. And finally, the Maui Fire Department is releasing the results of its official investigation into the cause of last year's fire. The conclusion is that the Maui fire was caused when Hawaiian Electric re-energized broken utility lines. Of course, you can follow all the latest company buzz on TREN Go on your Bloomberg terminal. Meanwhile, we take a look at futures right now. Just a couple minutes until these bells ring, and boy, there is red on this screen.
Yeah, but Bitcoin's rising again. Come on, can it get to the 67? Look at that. It dropped under 60 there for a second. It probably triggered some. It's likely that once you dropped under 60, you triggered some buy orders. That might be why you're getting a pop here. But yeah, also the Chinese stocks resetting a little bit today after an incredible run. And HSI ended down 1.47%. That was sort of their first sort of give back day. The Nikkei was up. Although it's still down on the month, last 30 days. All right, so futures are down for stonks, and Tesla keeps falling. Bond yields keep rising. Everything feels topsy-turvy right now. It's very strange. I didn't mean to hit that. That's kind of funny. I'm gonna turn that off. There's not a lot of room in here, so... This is probably my favorite one. How do I play that one? This one. Man out the window. That's terrible. I love it. All right. Let me see what other stuff we got here. So remember, we have S&P PMIs at 645, and then a crop load of ISM and factory order data at 7. Okay. Let's see here. Dollar is rising on positive shocks to U.S. This would imply economy more, operating stronger than expected. What's Atlanta Fed GDP right now? I think we were last at like 2.5 or something like that. We're down from 3.1. Let's see here. Yeah, 2.5. Last update was October 1st. Next update is October 8th. Oh, wow. Okay, we're not going to get another update for a minute there. Okay, what is this? Services continue to be the biggest discrepancy between the ISM and PMI services. ISM weaker than PMI. If ISMs begin to fall, Treasury, okay, yeah. This is basically arguing that Mattel 2 surveys. This is very confusing. Hold on, I'm going to try to read and understand this, and then
those things are comforting. To me, I interpret them as this is why you shouldn't necessarily expect the next pullback correction to be the big one. This is why the market in general should remain on trend, not we are spring-loaded to shoot higher from this level immediately. So it's, there's a little bit of a nuance to how you want to play that.
Let's get the opening bell here in the CNBC real-time exchange. And the big board, it is commercial retail REIT FrontView, celebrating a recent IPO at the NASDAQ. The Italian-American Museum celebrating Italian heritage.
We'll just see when the data comes out. Confusing predictions here. Okay, so looks like you got a little bit of a green candle there on Tesla. Green candle Tesla, green candle Qs. Red candle end phase. Red candle Amazon. Big red candle. Green candle Apple. Humana still red after yesterday's slaughtering. Dave & Buster's still at the lower end. Carnival Cruise Lines still dipping down a little bit. Palantir still at 37.60. Big green candle there. Let's move that one up to the top. There we go. Let's see. Will that green candle hold? I don't know. Maybe. Qs are going down now. Tesla. Oh wow, look at that. If you bought Tesla on the green candle, you just got almost a matching red. That's crazy. The first minutes are insane. Okay, Qs are now losing 479. Palantir keeps going. Look at that. Alibaba is trying to recover. Neo's trying to recover. Amazon's not. Q's still rotating down. Bitcoin now pushing down. Oh, look at that Tesla recovery. Wow. What vol? And it's going to go to 247.69 maybe? And what else do we have here? Apple's ticking down a little bit. Oh, now you're less than 1%. Only 80 bips down now on Tesla. Yeah, you're getting a move here. Tesla and Palantir seem to be your moves today. On the up. Let's lower some of these. There we go. Amazon's dragging here for some reason. Somebody sold at open. Okay, Q's recovering now. Tesla's still recovering. Look at that. There's the 247 line. Next stop 250. Nvidia's recovering. And let's see here. Redfin 60 basis points. Still pretty flat over here. See if there are any other interesting movers. Adobe's down a little. Etsy's at 51. Wow. Should look at some of these smaller ones. So I'm gonna write down. Look at some of them. So when we do the course member live stream, remember coupon expiring Friday and the price will go up. But when we do the live stream today and the course member live, why don't we look at some of these cheapies? Let's look at Etsy. Some of them are just traps, so you have to be careful. Dave & Buster's. See if there's any. We last did look at Carnival, but it might be worth looking at them. Maybe even, how's Diz doing? Oh, nice move there on Nvidia. A 2.5 on Nvidia now. Diz. Disney 93. Palantir, let's go. Look at that. That's just cranking right now. Tesla's almost green. These guys keep going. Somebody says the VIX is climbing. What are some other smallies? Obviously, mortgage companies, rates close to 6%. There was some talk, I think it was either in the Journal or in Bloomberg this morning, where they're talking about potentially a refinancing boom coming. Rocket Lab, is it hitting resistance? Love from Greece, RKLB. Oh, well, thank you. RKLB. I went on my honeymoon in Greece. So, oh yeah, wow. Y'all really had a nice run over here. Look at that. It's tough to say. Yeah, I think for Rocket Lab, you really have to look at the underlying fundies here. Like, do you have enough to kind of keep the narrative going, right? But I mean, so far the market's been bullish, and I mean, look at this. The Qs are pushing. You're about to go green on the Qs. Tesla
gained the lead.
Enphase
gained the lead.
Nice. Apple's about to as well. Let's see some of these other small ones here. A Firm. Firm would be something to look at in if you don't have a recession. Let's see here. A GameStop. Lennar, Roku. Didn't Roku recently start doing well? Not really. I mean, I guess they're off the floor. ASTS. That one momentum moves. Let's see here. Start super micro. Oh, they had their split. Look at that. $42. They had the 10 for 1. Restoration hardware. Adobe's. How's Adobe been doing? Adobe's a little on the downside. Unity. Nice recovery there on Unity, too. Be careful on that one with AI. IWM, small caps. Small caps really lagging here. Oh, look at that. Rejected again. That's interesting. Wingstop's a scam. It's just valuation is just crazy. And I hate the food. And the service. Not that you actually get much service. Sorry. I just had bad experiences. And their valuation's stupid. Walmart's now dropping. Rocket Mortgage, United Wholesale. What are some other smallies? Oh, look at Tesla. Going right to that 250. Qs still haven't made it green. And honestly, Bitcoin's being a little bit of a bear again. But Palantir and Tesla, nice little rockets. I don't know if it'll hold. Yeah, you're starting to get rejected now on Tesla. Yeah, and that makes sense because you didn't have the momentum to get through 250. It's the same thing that happened yesterday. We were trading this yesterday, or at least I was sending alerts on it. I think it was yesterday. We were going for 250. I'm like, I'm out, and then you start trending down. Oh no, yesterday we were consolidating. 250 reject was the day before. That's what it was. And the days are blending together. Yesterday was the consolidation, and then the sell down towards the end of the day again. Oh, look at that. BTC. Just giving up. Is Palantir as well? Palantir. They're topping out a little bit now. Except for Apple. Apple wants to keep running. All right. Let's see what else we have here. What would cause yields to drop? Poor earnings would do it. Yeah. Low inflation readings. Worse job ratings. Yeah. ChargePoint, someone says, is up 4%. Nice. What's some other ones? Hims. Ooh. Fries and Ranch are awesome. What's with First Solar outperforming Enphase? Yeah, I don't know. It really shouldn't be, but especially, I think there was just so much concern about the solar panel crisis of getting flooded by solar panels from China. Oh yeah, Jensen was like super bullish on Blackwell yesterday on CNBC. I watched that live. And I'm like, pump it, my friend, pump it. Adobe heading into a Tesla-like multi-year sideways market. Yikes. Somebody says, what happened to Hims? I don't know what happened to Hims. Ooh, Lemonade. Oh, wow. Yeah, what did happen to Hims? Very interesting because I have a line here. Of course I do. Yeah, look at that. Right off the line. That's funny. Hims. I'll find out. Oh, we have data soon. Oh, 6 minutes. 6 minutes to data. Hims shares open 11% lower after terzepatide shortage ends. Terzepatide. The hell is that? Chronic weight management. Are Ozempic and tirzepatide the same? The major difference between the two medications is that Ozempic mimics the GLP-1 hormone, while as tirzepatide mimics both the GLP-1 and another GIP. Okay, so basically now if there's no shortage, then you have waning pricing power is the thesis. Okay, whatever. Maybe they were making money, higher margins off the difference. Whatever. Lemonade. Boy, there's one I haven't looked at in like years. Wow, it's just been dragging along the bottom. Okay. Another one would be like Piton. Boy, that one. Oh, that one crapped the bed, huh? Whew. I still remember I was bullish on it. Then I still remember seeing inventory start climbing. And I remember going to the mall and like interviewing Peloton people at various malls. And they're like, yeah, I don't know, man. All of a sudden, it's just like, it's harder to sell these. And I'm like, dump it. And it was like $113 at the time. And boy, I'm so glad I did. That's crazy. That's a pandemic meme right there. All right, so a little bit more of a drop on the Chinese stocks. Oh yeah, look at that. Neo fading down a little bit more. Baba's fading down a bit more. Tesla.
Lost the lead.
And Fizz. Aww. So a little bit of that run topped out. Yeah, not a surprise. Look, you basically got rejected at 250 there. Should we have a line for that? I'm going to move this up to a better color. So I'm going to go green on it because it just keeps hitting there. And then I'm going to make this common or, you know, trash, basically. Okay. Yeah, Amazon, yeah, somebody definitely selling here. And Palantir is the only one that keeps going. Okay, data soon, though. So stay tuned for data. Wow, no, NVIDIA keeps going, too. 122.59 is the next stop. And then 125, I think? Yeah, 125.99 is the next after that. Oh, Tesla's bobbing around positive. Lemonade. Simpson Manufacturing. Yeah, how are they doing? With that construction slowing down. I'd be curious. Oh, they've actually done pretty well, honestly. How about Lowe's? Oh my gosh, that's ridiculous. Dude, Lowe's and Home Depot are at like all-time highs. All right, let's see what else we got here. Are you kidding me? Our local Sam's Club let us know they have not had a delivery truck in over a week and now they are out of toilet paper and bottled water. Stop. No, 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 not this trash again. Lauren, quick, go buy all the toilet paper. No, no, don't hoard. I'm kidding. All right, let me see. We're about a minute and a half to data. Oh, yeah. Well, I mean, taking a picture of a Costco line, is that really like, this is just what Costco always looks like. This is why I don't go there. It's like, if I have not been at the Costco line in probably a decade, and I have absolutely no desire to go back. I will not even wait for the pizza. It's good, but like somebody picked up pizza once at Costco and then they drove it back, but by the time it got back, it was all soggy. And I'm like, this is gross. Line at Costco, toilet paper. See, it's all everybody on social media is freaking out. So, oh, stop. These are just probably a lot of these are probably just nonsense. But you know, I'll be the one that's stuck without toilet paper. Frenzies. Oh no. Oh no. All right, let's get some data here. Who's ready? Q's are about to go positive. And let's get the data. And the PMIs come in. Services, 55.4 is the expectation. And it is it going to be hot or soft? Slightly softer. 55.2, slightly under the 55.4 expected. And composite, slightly softer at 54 versus 54.4. That is the final read for September, is indeed slightly softer. 15 minutes for even more data. Okay. So let's see. I'm sure they're going to yap about it. I want to hear them yap about it.
Next Tuesday, that there's no need to panic about decelerating demand for EVs. We'll see.
I love it when people on the news say there's no need to panic. Usually that means it's time to panic.
On a busy morning. Hey, Rick.
Come on, Rick.
Yes, and busy. We still have many more data points. Top of the hour, S&P Global Services PMI. Final read, 55.4. Mid-month now goes down just a bit to 55.2. 55.2 would be the weakest level going back to June of this year. If we look at 54.0 now replaces 54.4 on the composite. 54.0, well, that would be the weakest level going back to April of this year. And if we look at these numbers, what should jump out at us is there is some bright spot here. Unlike manufacturing, these numbers have been above 50 all year on the composite, and they've been above 50 going all the way back to the beginning of last year with respect to the services. So these numbers are holding up pretty well. Yields, well, 10-year yields briefly outpaced yesterday's high yield. As we see right now, as we sit, we're up 3 basis points on both 2s and 10s. Squawk on the Street will return after a short break.
Okay, let's see. I want to see if I can actually get the report. S&P Global Services. The market's not really moving off of this. You've got a bigger data dump at 7. Wow, Nvidia is now at 3.5%. That rally continues. Where's Palantir? I lost it. Oh no, there it is. It's almost at 2%. Nvidia and Palantir today. There's your bull. Okay, here we go. So, services PMI report. Here we go. Okay. Further solid expansion in output, inflationary pressure strength. Oh, see, that's not good. Okay. September saw further market expansion of services activity. Anything over 50 is going to be that. Demand was helped by a reduction in interest rate. New business continued to rise solidly, leading to a buildup in unfinished work as companies were cautious regarding their hiring. Now, that's interesting. Wow, this is not good for prices. Input prices, not necessarily consumer prices, but input prices rose at the joint fastest pace in a year, with selling price inflation also accelerating. I'm assuming for wholesale here. Okay, that's not ideal. Let's see here. Services activity has now increased in the past 20 months. Blah, blah, blah. Let's see here. Boost from low interest rates. Okay. Despite the expansion in activity and new business, confidence in year-ahead outlook dropped sharply with the lowest reading since October of 2022. So people are, like, you have a pickup in orders, but people are still bears. That's interesting. So, sounds like pickup in orders, but negative sentiment. On economy and election. Okay. Meanwhile, employment dropped for a second month, albeit only marginally. These sound like some bullish authors. Some companies reported lower staffing levels in a bid to save costs, but others reported staffing shortages. Okay. So a little bit of both. Let's see. Do they have a chart of this? They should have a chart of... No, they don't. At least not on this. Higher input prices were linked to salary pressures. Rising prices for manufactured goods led some companies to increase their selling prices markedly. That's not good. Services charge quickened to a 6-month high. And rates of increase in both input costs and selling prices were well above pre-pandemic averages. Aforementioned reduction in staffing levels at a time of solid growth of new orders meant outstanding business accumulated during September. Interesting. Backlogs of work rose for the third time in the past 4 months, fastest pace since January. I mean, this sounds bullish for orders. It's been in the expansionary territory. Obviously, it's been expansionary. And this is the services, but then they're talking about manufactured goods. Interesting. Oh, maybe because of the composite. That's it. Rising services activity contrasts with manufacturing weakness. Okay. Divergent trends between the two sectors continued. Manufacture. Oh, see, look at that. That's also interesting. The manufacturing downturn deepened, and then the inflationary pressure strengthened. Not good. This is, but we did already see this. Like the flash PMIs, they talked about this increase in inflation as well, which we covered. So, but there are some things interesting we can grab from this. So I think first let's watch Nvidia here get rejected by my line, because who doesn't love my lines? Okay. So some of the notes that they gave here were, okay, I'm gonna also make a note. Broadly similar to the warnings from the flash PMI report leading into this final report, which also included, because the last report also talked about this rising price issue in some of these. So input prices rising in fastest pace in a year. Then we had companies were cautious with hiring. This led to a backlog to increase. Sentiment negative, but new orders rose. Fifth month of expansion. And manufacturing downturn deepened. Interesting. Don't really know what to make of it. Oh well, I'm gonna save that. Okay, so now we have in 7 minutes a bunch more data that comes up. So we'll take a look at that. And then what else? Mastermind this Saturday. That'll be really cool. I don't think we have spots left for this one. We might. You'd have to email us at staff@meetkevin to find out. We have shadowing on Tuesday. We're gonna go look at a bunch of house hack properties, so that'll be really cool. If that's of interest, email us at staff@meetkevin.com. Coupon expires Friday. Data comes out in 6.5 minutes, so we'll cover that. So this is the S&P PMI report final for September. Save that. Okay. Then what else do we have? We already talked a bunch about Stock Hack. You know, you can get a free intro call if you want to see how the service could be right for you or not. You know, if we don't think we can help, I tell my team, like, if you're on the phone with somebody and we cannot help them, or you talk to me and I'm like, we can't help them, we're not going to take your money. So we want to make sure we're able to help. Okay, so what else do we have here? Qs?
Lost
No.
the lead.
I meant to
Gained
press
the
this button.
lead.
There we go. Gained the lead. The Qs just went positive, which is pretty good. You were consolidating there just under for a moment. Oh, wow. NVIDIA's almost 4%. Oh, look at Tesla in the lines. Reject. Reject. This is almost the triple reject. Wow. Very interesting. All right. Well, let's get the data dump here in a moment. What else? What are they talking about with the port strike?
Up ahead of time, companies have been ahead of this to the extent that they could be. But when it comes to those fresh fruits that Americans rely on, and also things like seafood and meat, you really can't keep it in a warehouse for a long period of time. Those are more of those just-in-time supply chains. And so those will be the products where we will first see that inflationary impact.
We'll get some fresh data on freight container rates, I think, tomorrow. We're coming off of a bit of a lower base, but we'll see if this has any impact this week. Pippa, thanks. Pippa Stevens. Scott, I know, has been watching some Chinese names to do.
Only because, we've been following them for a week straight since the stimulus, of course.
What are the odds that ADP comes in, or jobless, the job report comes in stronger or weaker tomorrow? Yeah, I mean, JOLTS and ADP coming in stronger sort of suggests that you're going to have a good jobs report tomorrow. I wonder how much of it is already priced in. But you did just have the Qs run. It seems like the Qs are really moving here on NVIDIA, frankly. NVIDIA is like single-handedly, I feel like, lifting the stock market today. Yeah, look at that. Almost up 4% now. We've been talking about it rising since the beginning there. Oh, Tesla's back.
Gain the lead.
It's gonna go test the line again. And Bitcoin bobbing around. Bobberand. Alright. Palantir almost at 3% now. Wow, look at that. It's another one we've been watching since the beginning here. Palantir and NVIDIA, they continue to impress. Everything else just seems red. Oh, AMD's moving up. Okay. 3 minutes to go for stuff. Oh, yeah, no, Palantir's valuation is, like, insane right now. Thank you for the $5. It's trading at, like, a 4.5 peg or something. It's, like, crazy valuation. Any news on NVIDIA? It was really the news on NVIDIA is that insiders are selling billions of dollars, but Jensen went on CNBC yesterday and pumped the crap out of the Accenture partnership and said Blackwell demand is insane. So, there you go. Okay. Somebody just bought 69 shares of DLD. Let's go. Okay. Let me go. Oh, I thought data comes out in 2 minutes, but I thought this was really interesting. Here's a stock that returned 2,500% in the last 22 years by going from the rectangle on the left to the rectangle on the right. Now, like anyone born before like 1995 should know about this. And it should actually bring back memories because when this change happened, it was a big deal. I remember when this changed and everybody was talking about this change. And it's kind of crazy to think that a company could return 25% by going from that rectangle to that rectangle. And so the rectangle, first of all, relates to this return right here. Look at that return. Sexy return right here. And it has to do with this. How they used to put cans of Coca-Cola in a 12-pack that was like, you would tear open the side and they'd all come falling out. So you'd have to tear it open and put it into like the drawer of your refrigerator. And they wouldn't fit on a shelf. To the shelf box that sort of self-dispenses. How crazy is that? Coca-Cola, 2,500%. Wow, crazy. All right. So now let's get the data. There's a lot of data coming out. All right, ready? Here we go. Okay, factory orders, negative, big miss. Factory orders, negative 0.2. They're expected to come in at positive 0.1. That's a miss. Durables, match. Durables, ex transportation, match. Capital good orders, smidge higher. ISM services, a good chunk higher. ISM prices paid, a chunk higher. ISM services employment, weaker. This is a mess. ISM services new orders, pops. Like big pop. 59.4. So factory orders down and a downward revision, but ISM services crank with weaker employment, more orders, and higher prices paid. Whoo, boy, Rick's about to freak out on how many numbers we just got right here. Holy crap. But yeah, that prices paid ISM services report, not ideal for probably bond yields. And then you've got ISM employment softer, but I don't know that that's going to be good enough to actually signal anything. I mean, it's just it is in contraction. That is interesting to see ISM services employment in contraction, because really, if you get contraction in employment, eventually you will get contraction in pricing. So, but that's pretty wild. Rick hasn't started yapping about it yet. I'm surprised. There's so much ISM services, but it's overall, I'd say this is probably good. This boosted new orders for the economy. Let me see if we have the ISM services report. They came in again. The last reading was 51.5. This one like blew it out of the water. 54.9, like really big beat there. They don't actually have the new report on their website yet, so I'm waiting for the new report to show up, the September report. And Rick's still not up. I'm actually surprised about that. Oh, there he is.
Likely making us move higher. If we look at ISM services for the month of September, we're expecting a number around 51.7. Our last look was 51.5. Zoom, zoom, zoom. 54.9. 54.9. That's the best since February of last year when it was 55.0. Now, if we look at the prices paid index, we're expecting a number around 56. This one moving the wrong way, which also can help explain why interest rates are moving up. 59.4. 59.4, that's the biggest, the worst, the biggest jump in prices paid since the very beginning of the year, January, when it was 64. If we look at employment in front of tomorrow's jobs report, bit on the weak side, 48.1, sequentially following 50.2, and once again, we revert back under 50 where we were in June. Finally, on the new orders front, this one's a strong one, 59.4. 59.4 is the best also since February of last year, as the headline number was. That most likely grouping is accounting for the pop in yields. Now let's go through factory orders. Expected up 1/10, comes in at down 2/10. Last month slightly revised from 5 to 4.9%. Ex-transportation still remains weak, down 1/10. If we look at durable good orders, these are all final reads, replacing mid-month reads. Unchanged, remains at unchanged. Ex-transportation remains up 0.5%. Capital good orders, non-defense ex-air, a proxy for capital spending, improves by 1/10 to up 0.3, and that would be the best month since just June of this year. And finally, on the shipment side, instead of on the new orders side, we see shipments down 0.1%. And we all know that we have had some problems in that category. We want to continue to monitor what lies ahead, especially considering the word shipments takes on an added dimension considering the strike. Carl, back to you.
All right, Rick, thanks.
Good summary. They still don't have their doc up. Like, I really want to see the actual report. And it's still pinging for August, but the current report is September. So it does make you wonder, like, the only thing to really question here is, did you get a boost going into the port worker strike in anticipation of the holiday and sort of build-ups? And that's why I want to actually see the report to get some detail. But it is not available yet. Anyway, the stock market doesn't really care. The stock market's just going up on it. So you've got the Qs up nicely now. I mean, you were literally 0 at the beginning of the day. And they just rocketed up to, up 50 basis points, which is pretty good. Then you have yields that jump. Yields just jumped to, what is it? 10 years, 4.7. Up, I mean, that's a good chunk. What's the 2-year? 2 is up 6.2. So that's interesting. More inversion, actually. That's fascinating. And then Bitcoin's rising. Palantir's still going, almost up 4% now. Wow, this sucker just keeps going. Palantir and Nvidia, literally we've been talking about it since market open. These two keep going. And boy, they keep going. Okay, so Tesla still couldn't make it every time it gets rejected over here. And oh, Dave and Buster's went up a little bit. DJT went up a little. I didn't see some of these greens earlier. Interesting. Okay. So, do we have the report yet or no? Still not out. Stupid. Why does it take them so long to put the report on their website? Oh well. Anyway, we're going to do a lot of analysis in the course member live stream coming up shortly. If you want lifetime access to those course member live streams, you only have to buy one of the courses and you get lifetime access forever. Prices go up on Friday at 11:59, and you lock in the best price forever once you join once. September, October issue. Is this it? No. Still not out. All the data came through, but still no September report. How are you guys so late? It's rigged. Oh well. Okay. Shout out to those of you who did join just recently here. Todd got a bundle, gold course and stocks and psych. Bartels, welcome aboard. Timothy, welcome aboard. Albert, Schmidt, Omar, Christopher, welcome aboard. And let's see here. Oh, we got a real estate agent sales course sale here as well. How to sell like me, Kevin. Anyway, adjustments, no. Still don't see the report. I wanted to go through the report with everyone. I keep refreshing. Make sure I'm in the right place because I do want to talk about it. ISM service, no, I'm in the right place. Oh well. So, pretty good. Is Tesla catching up at all on this? A little bit. Not great, but a little bit. And, hallo aus der Schweiz. Ooh. All right. Very well. So, I think that's what we got for today. Thanks so much for being here. We'll see what happens. We'll do some analysis in the course member live. Appreciate y'all being here. We're going to go to the course member live after I make a cup of coffee here. And for now, I'm going to push the button. Thanks so much, folks. Bye. Even though I'm a licensed financial advisor, real estate broker, and becoming a stockbroker, this video is neither personalized financial advice nor real estate advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show should not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purpose of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services which we may benefit from. I personally operate and actively manage the ETF and hold long positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuers other than HouseHack, nor am I presently acting as a market maker. Come say hi. You got anything to say?
Hi.
That's it?
I just woke up.
You just woke up?
Yeah.
How was your sleep? You gotta tell everyone about the sound machine you have. What sounds does it make?
Oh, it has like.
You gotta talk a little louder that way.
It has like it has different sounds, but I just like having it on like low, and it has like a rainy noise.
Every time I walk by your room, I just hear it raining in there.
I had trouble going to bed.
Yeah, that's all right. It's fine. Everyone's different, eh? High five. Sweet. All right, folks. See you in the next one.